Hi guys, quick update here for YouTube Bitcoin Technical Analysis Friday, 8th of July 2022. Hope everyone's doing great. So given how many people are buying this dip at 20,000, where really we've only been here 5 weeks in the last 12 years, I've increased the probability of the pandemic lows getting taken out to 17%. I will continue to increase this as we get more information on the price action, but also more information on sentiment and positioning on Twitter and on YouTube. I cannot believe there's so many people who are comfortable buying this dip somewhere where we've only really been for 5 weeks. 2 weeks here when we shorted the exact top and 3 weeks here. This market has to go lower. Minimum, we go to 8 to 10,000. This probability is 17%. Now, I will do an S&P 500 update at some point. This doesn't look very nasty. I mean, it's only down 23%. We're nowhere near the pandemic highs or lows. And, I have developed recently over the last 4 weeks or so, which I've shared with the group, an incredibly bearish interpretation to what's going on. If that very, very bearish interpretation plays out, I won't tell you how low it's going to go, but we're definitely going to take out the pandemic lows. In that situation, therefore, Bitcoin, I don't even think it stops at 8K. It will end up going even lower. So given that there's such high probability we're going to go into this box, and the 17% probability we're going to go down into here, it's actually unbelievable why so many people are buying this dip. This looks like a nasty ABC 1929 super cycle crash, which is basically following, I think, the cycle crash from down here, 30 to 2 back in 2011. So either you're a little bit bullish on this market short term, maybe a retest of 22,500, the 200-week moving average, or you're very, very bearish. So still it's a time for most people just to be fishing. There's nothing to do here. It's just going sideways and it's probably going to go lower. Like I said, if that extremely bearish interpretation of the S&P plays out, it's definitely going to go a lot lower than even 12,000 here. Now, if we have a look at the short term, I mean, I don't think there's anything to do here short term. I mean, it's very hard to say that's a 1, 2, 3, 4, 5. I mean, that is extremely hard to make that count. All we're doing here is redistributing the asset to retail traders, which effectively that is what is going on. So if you want to copy a fractal, you may as well copy this one from here. So if we follow this exact fractal, we could go sideways here to the 13th of July. So maybe another couple of weeks, fine, you could probably extend that, maybe the end of July, then we go down again. The next big dump is definitely going to be down, right? There might be a bit of a, deviation above these highs here, 22.5K, do a retest. I do expect this 200-week moving average now to comfortably act as resistance to the price. Bitcoin has never been more than a couple of weeks below this 200-week on a closing basis. We've now comfortably closed nearly 4 weeks underneath here. That is very, very bearish. This market has to go lower. As long as there are people buying this dip, this market has to go lower. Bottoms aren't formed until everyone basically chucks the towel in and feels it's going to go to zero. I'm not saying it is, but people have to feel it. None of the altcoins are confirming Bitcoin's move at all, and there's many leading indicators. So frankly, that is the only fractal that you should be really following here. I think it's too easy really for many people to abuse this fractal tool. They're like saying, okay, this is this. I mean, obviously we could take any fractal and guaranteed I could make something off it. Yeah, okay, Bitcoin is going to go to 562,000, right? And if anyone wants to know longer term, I've actually done a calculation here for those who want to know to 854,000, right? Now I'm talking extremely long term, right? But the super cycle 3 that's going to come out of it, because obviously I'm saying it's a super cycle 2 crash. The move out of it is going to be incredible, but that move hasn't even occurred yet. There's no point even looking at the upside targets here. What we're dealing with is a nasty move down. So the upside target is completely irrelevant, right? Frankly, I should just delete this really to make sure people don't get too excited. there's no point looking at that right now. So it's obvious, right? Yes, we are saying long term, hey, I'm more bullish than anyone. It's not my fault. The first day I make a YouTube video, I call the top, then I call the low, right? So Bitcoin effectively has been in a 5-year bear market, really, right? There might have been a few bull cycles here and there, but it's effectively been in a bear market. So the move out of it is going to be amazing, but that's not important right now. The important point is there's no point being long in any kind of dollar cost average position, especially if the more bearish interpretation on the S&P plays out, okay? This looks awfully bullish. And, if this S&P develops into a certain pattern before the end of the year, there is a chance this S&P completely, rolls over here Q1, Q2 in 2023. So, still very cautious. Now, if we have a look at Litecoin, this is the most obvious chart. A lot of the time, these altcoins can be easier to read. I mean, it's such an obvious expanded flat pattern. So it doesn't make any sense to be bullish on, because Litecoin is equal to Bitcoin multiply Litecoin BTC. So let's just say, hypothetically, this value is 10, this value is 10. Obviously, Litecoin USD would equal 100 because 10 times 10 is 100. I'm saying Litecoin is going to halve. That's going to go to, 50 effectively. People are saying Bitcoin is going to increase by 50% to 30,000. So they're saying it's going to go from 10 to 20. So what do we have to multiply 20 by to get 50? Obviously 2.5. So mathematically, this makes no sense. We are saying Litecoin BTC has to fall by 75% to justify a 100% increase in Bitcoin, while simultaneously calling for a 50% crash in XUSD, where X is the altcoin, i.e. Litecoin. Doesn't make any sense. None of the US dollar pairs on the altcoins have bottomed. They all have minimum, and I'm being nice here, 40%. Really, it's more like 50%, and in some cases, for certain coins, it's more like 70%. Mathematically makes no sense whatsoever for Bitcoin to do nothing here other than go down eventually once it's redistributed this asset to more retail traders. So, mathematically, it makes absolutely no sense for this market to be going anywhere but sideways and down. The next big dump is the most interesting. Now, if we have a look on the futures, I do feel a bounce is coming though, for what it's worth. We're not quite there yet. I don't think it's going to be 16k, by the way. I'm looking at 14.4k, let's say, to around 15k. There's very strong Fibonacci support there, which is the primary tool of target, which I use because it's the most accurate, obviously. 14.4 to 15k. What I think is going to happen is an oversold bounce to 20k, i.e. retest this amazing level at 20k, where everyone seems to be buying, even though we've only been there for about 5 weeks in 13 years. Then we come back down again, and we settle, as we've said, in this area here. Watching the dollar index and watching the euro and watching oil and the S&P and the Nasdaq is very, very important. You cannot only look at this market. So, to summarize then, we're still bearish on this market, sideways consolidation, maybe a few more weeks, then we get a push down. The next major pump will be 14,500. Obviously, it's risky, right? This market will continue to be risky until it ends up in this blue box. Only then can we reassess. Still a time for most people to be fishing. I would say the 200-week moving average will now act as resistance rather than support. Finally, we have been calling for a euro to parity move for over 1 year now, and basically I don't think it's a bad idea to convert dollars into euros, frankly. You never want to overplay your hand. I happen to think, however, I don't think this euro move is done. I think it can still go lower. There's definitely some interesting pivot levels even below parity, but regardless, you never want to overplay your hand. With that being said, this dollar move is very, very important. I've been around long enough to know the dollar consolidates for a very long time, for years, and then it has a huge breakout. Why? Effect is proportional to the cause before it. Just like here, this looks awfully impulsive. much like it did here to here. So I can still see a situation where the dollar eventually actually breaks this line, right? So if people want to use fractals, bullish fractals on Bitcoin, the only bullish fractal that you should be using is the one on the dollar index. Now, I understand, and I've been told this many, many times, there's another chart to use the dollar on, because I've always used the dollar futures, because I always go off the futures. The best count is off the futures, so that's not it, obviously. So let's just find it then. I believe there's another one. Right. So I'm not sure how accurate this data is. I don't even believe there was a dollar index prior to... Well, we came off, I believe it was the 70s when we were off the gold standard. So maybe there is some relevance there. So let's just draw that line in the sand. When did we actually open here? See, 120. So going off the futures, I was looking at a trend line, something like, I mean, obviously that one's already been broken. So it comes down to what time the futures were open. So we were approaching that trend line here. But if you were to zoom out, you know, actually, this can still go a lot higher. And so I suppose we can use this chart then. So let's just carry on with this. We're saying something like this. I mean, that looks so impulsive. So, you know, short-term parity makes a good headline, dollar consolidation, and then ultimately we can go higher. So if we just, I don't know, something like this, that gets it to a 136, which ends up, you know, retesting some levels we haven't seen literally for 40 years. For nearly 50 years. So it's very hard to be bullish on Bitcoin if this is a possibility. Anyway, let's go back to the futures, because this is the chart which I'm using, because it has volume basically. That's the only reason that I'm using it. It gives you the actual volume. Here, short term, I think it gets into here, and I think some kind of flag, eventually we do break this line. So 120, 130 is very much possible. Obviously, that would provide a lot of downside movement. So to me, it's still too risky with Bitcoin. I still see all of these altcoins falling further. At some point this year, there will be a great buying opportunity. It's just not here yet. So I don't think I have much to update there, so hopefully everyone found that useful. Please do have a look through the educational content on the YouTube channel, and of course there's various courses. You can follow the links online if you wanted to. I will try and get an S&P 500 update out at some point soon for YouTube. The bearish interpretation for the S&P, especially if we get a huge gigantic dollar move well above that trend line there on the futures, is extremely bearish. It's very, very bearish, and we take out the pandemic lows. I won't tell you how low it's going to go just now, because we're nowhere near to confirming that possible count, but put it this way, it's very bearish. Anyway, I'll catch you guys soon on the next video.